So we're good to go. So employment income tax, I'll say we're going to cover it under two parts. The employer first deducting pay, and then they remit that pay to KRA. So they deduct and remit KRA, you have those as credits. So the two to the theory have come to isoma, you have your debit and credits. Yes. So when the employer is deducting pay, that when they file, they are credited in your tax return. Just so every month, like if I pay by 9, so whatever has been deducted as credit will now be credited to your tax returns. So you can also always confirm if you're working for a company.
We have paid the KRA.
No, the employer has paid KRA.
Oh.
You also work for a company. At times companies will deduct. So you know unapata net. See, I think there are employers. There are some employers who will deduct and not even pay your NSS shift. So it's always good you also check. So you can always log into your tax ledger and see if you're having those credits, so that you are sure whatever was deducted was actually remitted to KRA. Because you will not really know at the end of the year once they have issued you P9. An example of what I've given you, those years. So let's look at pay. So unemployment income for the payee. So for employment income, we are just briefly looking at what is chargeable to payee, and then what are deductions that are allowable, and then the graduated scale. We've mentioned that payee is based on a graduated scale. So payee, it is taxed on employment income. And then employment, what is employment? You had a case where you're working for a company, but there's a consultant. So you are being deducted withholding tax, meaning haikuwa employer-servant-master relationship. So an employer is required to deduct and pay payee by every month, by 9th of every month. Failure to which penalty for payee is a bit punitive. The one was 5%. This one is 25%, because if you're not remitting, you are stealing from two people. You are stealing from the government and from the employee. So the tax rate is a bit high. The penalty is 25%. Or 10,000, whichever is higher. But in terms of penalty for late payment and interest, is still same like the one we talked about for VAT. So penalty for late payment,
Your 25 ni per month.
You know, if you fail to,
if you for late
penalty, penalty for late filing is 25%. See, you're supposed to pay every month. So if you fail to pay 25% of course, pay you there find a company filing nil for pay. You get a pay obligation, and you have to pay because you have employees. So if you don't pay, you file late, you are penalized for late filing, and then because you have not paid, so you file 5%, you get 5% of it. They are not payable, and then there's an interest of 1% for every month. Equal interest.
It's two penalties. What is the fee on the payment?
Yes. So there's a penalty. Normally, if you use about it, you're supposed to always file. You're supposed to pay. So when you're filing, they are declaring to KRA, this is what we have collected and we are giving you. So you fail to file on time, you are penalized. So there's a penalty. Number 2, you have not paid that tax on time. So there's a penalty for late payments, which is 5%. And then there's interest. See, person full penalty. You've not paid them on time. So they'll charge an interest of 1% per month. Simple interest. The penalty here is 25% or 10K, whichever is higher. Sasa kwa employee moja, whatever you have to pay the penalty is below, is more than 10,000. So you'll be penalized 25% of that. If it falls below, you'll just pay the 10,000. Hope that is clear. So what income is subject to pay? Basic salary, leave pay, payment in lieu of notice, commissions, bonuses, allowances, is free benefit tax on loans, non-cash benefit, car benefit, house benefit, stroke servant. So when you get an employment, siempre wanakupea basic salary plus allowances like house allowance, travel allowance. So those allowances are still subjected to pay. So if you get your payslip itakuwa na your basic pay. So this is what you have as your basic pay. Then you have allowances. So you have allowances like travel. So we still add. Companies will give you commission how you perform. We need to add them. If you're dealing, especially what you're saying, at the end of the year, the company will make profit and declare bonuses and give bonus to employees. So December, some of the bonus, you have to give what belongs to Caesar to Caesar. Then allowances that are below 3,000 and above 3,000. So the current finance bill that is being tabled is wants to increase this to 10,000 because most actually per diem, the per diem ikikuwa more than 3K, the excess is supposed to be taxed. The 3K ni kidogo. So the current finance bill that was tabled for budget is supposed to increase it to 10,000. Fringe benefit tax on loans. At times you have an employer give you a loan. So the employer gives you a loan, you had an option of going to the bank to ask for a loan. So the employer is giving you at an interest that is favorable than what the bank would have charged you. So that difference has to be taxed. And it is what is known as fringe benefit tax. How it is computed is a difference of what the employer has given you as the interest and 91-day treasury bills rate. So every occasionally, KRA updates what rate would be used for the fleet benefit tax, but it is a 91-day treasury bill rate. Currently, I don't know if you can check to confirm the actual rate. So the difference, hiyo difference yenye ni kama mwenye alienda bank alichajiwa mili. Let's give an example 18%. Na wewe employer amekupea loan 10%. Kuna 8% difference. And you know taxing and that employment income or pay. Fringe benefit tax. Then you have non-cash benefits. If you are given a car, there's some computation you are doing on car benefit based on the value of the car, the CC, or if the employer is hiring the car for you, that is also treated as a benefit. Si mwingine alikuwa analipa mshahara analipa fare, wewe haulipi fare. Na ile analipa fare ni part of the salary. So it is also taxed. Then other benefits for other offices, you even get servants. You have a house manager, a gardener. All that are treated as benefits that are supposed to be subjected to pay tax rates. So we have added, so tumeongeza basic pay plus the allowances, then we have the total. So before we subject this to tax, we have allowable deductions. So what are part of the allowable deductions? One of the allowable deductions that will be an allowable deduction. One of it is insurance. So this one, life insurance, educational policy, that is for more than 10 years. So if you take a life insurance, it is an allowable deduction to a maximum of 5,000 because wanachukuanga it is 15% of the premium. So ukichukua insurance unalipanga monthly premiums. For instance, if you take an education policy, you want to guarantee the education of your children. So you end up with insurance company, you purchase an education policy, you're supposed to pay it per month. And you will pay for quite a number of years or life insurance for more than 10 years. So the 15% of that premium is allowable to a maximum of 5,000. Because kuna mtu atachukua policy, if you do 15% of the premium, is more than 5K. So the maximum you can claim is 5,000. Then you have pension contribution. It was at 20,000. December, ikaongezeka to 30,000. So to encourage people to save for retirement, so if you save for retirement, that pension contribution is allowable. So whatever you are paying to NSSF is an allowable deduction. It may not be enough. There are people who have different pension other than what NSSF is having. Some companies have their own umbrella pension schemes that you pay for the employees. Then this is a new, still came with that December changes. If you are contributing to your post-retirement medical insurance to a maximum of 15,000, then for those people who are having mortgages, owner occupied. See, mortgage umechukua ukanunua nyumba ya rent. The one that you are taking a mortgage for your owner, for yourself, owner occupied mortgage interest, maximum 25,000 is allowable. So you have those reliefs. So hizo reliefs zote total tunafaa tuzitoe. We rest what we had here is total. Then before, once we tax, then personal relief, this one is applicable to everyone. Kila mtu is a personal relief of 2,400, except non-residents. So resident persons get a personal relief. Number two, there's somebody who is working for more than one employer. You can only get personal relief from one employer. So it is good if you know you're working for more than one employer, you disclose to one that you're earning to somewhere else so that they treat you as a secondary employee. Because if you get that benefit, at the end of the year when you're filing for tunaangalia P9, you'll have a payout. Then for persons with disabilities, and they have registered with the Council for Persons with Disability, they have their first income up to 150,000 is exempt. So if you know somebody who has not taken advantage of this, they have a disability, they need to register, so they will get their income up to 150 not being taxed. Whatever is above, you will tax you. So the graduated scale ya paying ndio hii. On the first 24,000 per month, the tax rate is 10%. On the next 8,333, we'll tax you at 25%. On the next 30% in hivyo, the highest band we have is 35%. So that is it on PAYE. So that is a bit of theory. Unless there is any question, so that you can find a practice like here, you can pitia kidogo.